Title: The day a small team in Lagos outsmarted the giants, Flutterwave's battle plan for winning in Nigeria. Imagine this. It is 2015. Cash still rules the streets of Ibadan. POS machines freeze on rainy days, and if you tried to pay a vendor in Lagos with a card from London, the transaction would die faster than any light during a storm. The big banks were comfortable. The telecom giants were distracted. Then a group of young builders walked into that chaos and asked one dangerous question. What if paying across Africa was as easy as sending a text? That question became Flutterwave, and the way they handled competition in Nigeria is not just a fintech story. It is a street-smart survival playbook for any entrepreneur, job seeker, or small business owner trying to win when the odds are stacked high. Welcome to part 1 of our 3-part case study. By the end of this series, you will have 8 battle-tested principles Flutterwave used to outmaneuver bigger, older, and richer competitors. You will also see the 3 mistakes that bury most Nigerian businesses, plus lessons you can apply tomorrow, whether you are unemployed, underemployed, or building your first side hustle. Let us start from the beginning. Part 1. The Nigerian Arena. Why competition here is a different sport. Nigeria is not Silicon Valley. Here, competition does not happen in neat pitch decks. It happens in traffic on 3rd Mainland Bridge, in the market at Dugby, in the moment a customer chooses between your app and the cash in their pocket. When Flutterwave launched, the field was already crowded. Big banks like GT Bank and Zenith had trust branches on every corner and millions of cardholders. Their product? Traditional merchant acquiring. Their weakness? Cross-border payments were slow, expensive, and painful. Telco players like MTN and Airtel had airtime, agent networks, and mobile money dreams. Their product? Wallets that struggled with interoperability. Their weakness? They thought like telcos, not like software companies. Global giants like PayPal had brand power. Their product? Accept payments, globally. Their weakness? They blocked Nigerian merchants for years, creating a trust gap Flutterwave walked right into. Local startups like Paystack, Remita, and VobePay were already fighting for online merchants. Their product? Simple APIs for web payments. The battleground? Who could sign up developers fastest and keep transactions from failing? So how did Flutterwave not just survive, but become the infrastructure powering Uber, Microsoft, and over 1 million African businesses? They did not fight harder. They fought different, understanding Flutterwave's core products versus the competition. Seek the principles clearly. You have to understand what Flutterwave actually sells compared to others. Rave by Flutterwave versus Paystack. Both give developers a pass to collect online payments. Paystack won hearts with simplicity and customer support. Flutterwave answered with breadth. While Paystack focused deeply on Nigeria, Flutterwave built Raves to accept cards, bank accounts, mobile money, M-Pesa, and even USSD across more than 30 African countries from day one. Competing with Paystack was not about being cheaper. It was about being the passport when a Nigerian business wanted to sell in Ghana tomorrow. Flutterwave store versus traditional bank POS. Banks gave merchants a physical POS and said, "Good luck." Flutterwave gave small shops a free online store in 5 minutes, no coding needed. For the underemployed tailor in Ibadan, the choice was a bank S2-week POS application or a Flutterwave link they could tweet the same afternoon. Barter by Flutterwave versus regular domicilia accounts. Banks made you fill forms and wait days for a dollar card. Barter gave young freelancers virtual dollar card instantly on their phone. That is how Flutterwave turned competition with banks from we versus them to we solve what they ignore. Flutterwave for global enterprises versus Interswitch. Interswitch owned infrastructure and had government relationships. Flutterwave did not fight them for local switching. Instead, they became the API-layered global companies like Uber used to plug into Interswitch, banks, and mobile money all at once. They competed by partnering. Now, with that battlefield in mind, here are the first 3 of 8 principles Flutterwave used to handle competition in Nigeria. We will cover the rest in Part 2 and Part 3. Principle 1. Build infrastructure, not just apps. What it means. Most Nigerian companies compete at the surface. They launch another payment app, another food delivery service, another loan product. Flutterwave went one layer deeper. They built the roads everyone else would eventually drive on. How Flutterwave did it. While others were fighting to sign up merchants, Flutterwave spent years integrating directly with banks, card schemes, and mobile money operators across Africa. They became the rails. So when PayPal wanted to pay African freelancers, when Microsoft wanted to sell in Naira, they did not build from scratch. They plugged into Flutterwave. Compare. A typical bank says, use our POS. A typical startup says, use our app. Flutterwave said, use our infrastructure to build your own app, and we will handle the messy bank and regulatory work. That is why competitors became customers. For you. If you are unemployed or underemployed, do not just sell tomatoes. Can you become the person who supplies packaging to 5 tomato sellers? Do not just drive for Uber. Can you organize a car maintenance co-op for 10 drivers? Infrastructure wins because it is hard to copy and everyone needs it. Principle 2. Expand the market instead of stealing customers. What it means. In Nigeria, too many businesses fight over the same small pie. They undercut price by 5 naira and call it strategy. Flutterwave grew the pie. Flutterwave did it. Before Flutterwave, how did a fashion designer in Yaba sell to a customer in Kenya? Bank wires took days and fees killed profit. Flutterwave's made it possible in seconds. They did not steal merchants from Paystack. They created new merchants who were never online before. They went to churches, schools, and social media vendors and said, you can collect payment now. Compare. When Interswitch and banks competed, it was for big corporate clients. When mobile money operators competed, it was for the unbanked. Flutterwave asked, who is in between? Freelancers, Instagram vendors, small exporters. That ignored middle was massive. Stop asking, how do I beat the other shoe seller? Ask, who is not buying shoes at all because payment or delivery is hard? If you are on social security or job hunting, your opportunity is not always in Lagos Island. It may be in helping people in Abamo Sosel to people in Accra. Principle 3. Use partnerships as a weapon. What it means. In Nigeria, pride kills businesses. We can build it ourselves is why many die. Flutterwave treated competitors like potential collaborators and treated global giants like distribution channels. How Flutterwave did it. They partnered with Alipay so Chinese customers could pay Nigerian merchants. They partnered with Visa to launch barter. They partnered with banks they were disrupting. Instead of saying, banks are the enemy, they said, banks have licenses, and we have tech. Let us work. That move got them into rooms a startup could never enter alone. Compare. Some telco mobile money products failed because they refused to open up to banks. Some banks failed at digital because they refused to work with fintechs. Flutterwave sat in the middle and told both sides, you win if you win. For you. If you are a small business, your competitor today could be your supplier tomorrow. That welder down the street, partner to bid for bigger contracts. If you are unemployed, your competition for jobs are also your network. Collaborate on a project and you both have a portfolio. Why this matters for you. Whether you are in Ibadan like Adetokunbo, trying to start over at 52, or you are a young graduate on Social Security, the Flutterwave story is not about code. It is about mindset. They won in Nigeria because they, 1. Solved a problem bigger than themselves. 2. Played a game others were not playing. 3. Turned enemies into allies. In Part 2, we will unpack the next 3 principles, including how Flutterwave used regulation as a moat and how they handled pricing wars without bleeding cash. In Part 3, we will cover the final 2 principles, the 3 deadly mistakes other Nigerian companies make, and the lessons you can apply this week. Your move. If this first part gave you a new way to see competition, I need you to do one thing. Head to my YouTube channel and subscribe. That is where I will drop Part 2 and 3 of this Flutterwave breakdown, plus real case studies you can use to grow income in Nigeria's tough market. Do not watch from the sidelines while others build the future. Learn the playbook. Then go execute. See you in part 2. And remember, in Nigeria, the big win does not go to the loudest. It goes to the smartest. Subscribe now, and let us build. Title: The Silent Weapons of a Market Leader, How Flutterwave Turned Rules, Trust, and Price into Advantages. Let me tell you a secret about business in Nigeria. The loudest company rarely wins. The winner is often the one who understands the referee, earns the crowd as trust, and knows when not to fight on price. In part 1, we saw how Flutterwave chose infrastructure over apps, grew the market instead of stealing customers, and used partnerships as a weapon. But that was just the opening round. The real fight, that happened in boardrooms with regulators, in the minds of skeptical customers, and on the spreadsheet where most startups bleed to death during a price war. Welcome to part 2. Today we uncover the next 3 of 8 principles Flutterwave Nigeria used to handle competition. We will compare their moves to what banks, telcos, and other fintechs did differently. And if you are an entrepreneur, unemployed, or rebuilding after job loss, these are the principles that separate survivors from statistics. Let us get into it. Recap from part 1. Before we move forward, remember where we stopped. Principle 1. Build infrastructure, not just apps. Principle 2. Expand the market instead of stealing customers. Principle 3. Use partnerships as a weapon. Now, principles 4 through 6. Principle 4. Turn regulation into a moat, not a headache. What it means. In Nigeria, many founders see CBN licenses, SEC rules, and compliance as punishment. Flutterwave saw them as protection. If it is hard for you, it is hard for your next 10 competitors too. How Flutterwave did it. While some startups operated in the gray area and prayed, Flutterwave invested early in licenses. They secured a switching and processing license from CBN. They became PCI-DSS compliant when many local players ignored it. That meant when the CBN started clamping down on unlicensed operators in 2021, Flutterwave kept moving while others paused or shut down. Compare. Traditional banks had licenses but moved slow on new tech. Flutterwave had both licenses and speed. Early mobile money operators. Some telcos launched wallets without full regulatory clarity. When rules tightened, growth stalled. Flutterwave used the same period to sign deals with those same telcos because Flutterwave already had the paperwork sorted. Paystack, also strong on compliance. The difference? Flutterwave used its licenses to go Pan-African faster. One license stack in Nigeria became the template to enter Ghana, Kenya, and South Africa. Paystack stayed Nigeria-focused longer before its Stripe acquisition. The lesson for you. If you are selling food, learn NAFTHC rules before your competitor does. If you are freelancing, register your business name with CSE even when clients are not asking yet. Regulation feels like a brake, but in Nigeria it was actually a seatbelt. The crash will come. Only the compliant survive it. For the unemployed and underemployed. You may not need a CBN license, but you need credibility. Get that certificate. Document your process. Keep records. When the big opportunity shows up, the person who is ready on paper gets picked over the person who is better, but informal. Principle 5. Win trust before you win transactions. What it means. Nigerians have long memory for money loss. One failed transfer, one scam, and you lose a customer for life. Flutterwave understood that in payments, trust is the product. Tech is just packaging. How Flutterwave did it. They did 3 things others ignored at the start. First, brand association. They powered payments for global names like Uber, Facebook, and Booking.com. With a small business in Ibadan powered by Flutterwave on Uber, the thinking shifted from, who are these guys? If I prefer trust them, maybe I can. Second, visible reliability. They invested heavily in uptime as status pages. When transactions fail in Nigeria, silence kills you. Flutterwave communicated that built confidence with developers, who then recommended them to merchants. Third, security storytelling. Barter by Flutterwave did not just say, get a dollar card. It showed you how your money was protected, how disputes were handled, and gave you instant freeze options. Compare. Banks had trust, but lost it with bad digital experiences. A bank app that fails on salary day destroys decades of brand equity. Flutterwave had no decades, so they protected every single transaction like it was their last. VobePay and older gateways struggled with perception after fraud incidents and downtime. Flutterwave entered the market when merchants were actively looking for who will not disappear with my money. Paystack, also excellent at trust. The battle was not trust versus no trust. It was trust versus trust. Flutterwave differentiated by showing it could be trusted across borders, not just in Nigeria. The lesson for you. Whether you are selling Zobo or offering consulting, your first job is not sales. It is trust. Do you deliver on small promises? Do you show up when it is inconvenient? Do you communicate when things go wrong? In Nigeria, one testimonial from a respected person is worth 10 adverts. 4 people on Social Security or starting over. Your age or employment gap is not your weakness. Your consistency is your new 105. If you tell one neighbor you will braid hair by 4 p.m. and you show up at 3:50, you are already beating 90% of competition. Trust compounds. Principle 6. Fight price wars with value, not discounts. What it means. The fastest way to die in Nigerian business is to compete on price alone. Someone will always be willing to go lower until nobody eats. Flutterwave rarely played the we are cheapest game. They played we are most valuable. How Flutterwave did it. Look at their pricing versus others. Rave's fees were not always the lowest compared to some local gateways. But Rave gave you 20 payment methods, settlements in multiple currencies, and chargeback protection in one dashboard. For a merchant, that meant one integration instead of 5. Time saved is money saved. Barter was not the cheapest dollar card, but it was the first that let you create, freeze, and fund a card in 2 minutes without entering a banking hall. Speed is value. Flutterwave store was free. Why? Because it was not the product. The payments behind the store were the product. They used free to acquire merchants, then made money when those merchants grew. Compare. Banks charged less per transaction sometimes, but gave you paperwork, delays, and no support. Total cost of using a bank was higher. Some new fintechs came in with 0 fees, promotions. They gained users, but bled cash and shut down. You cannot subsidize Nigeria forever. Paystack also avoided a race to the bottom. They competed on developer experience and support. The result? Both Paystack and Flutterwave train the market that reliability is worth paying for. The lesson for you. If you are a tailor, do not be the cheapest. Be the one who delivers without excuses during wedding season. If you are job hunting, do not be the one who will accept any salary. Be the one who solves a specific problem so well that HR says, we cannot afford not to hire them. For the underemployed, your boss or client is not just buying your time. They are buying peace of mind. If you respond faster, communicate clearer, and fix issues without drama, you can charge more than the person with 10 years experience who is difficult to work with. Putting it together, the mid-game strategy. So far, Flutterwave's playbook looks like this. 1. Own the infrastructure. 2. Create new customers. 3. Partner. Do not just fight. 4. Make regulation your shield. 5. Sell trust, not software. 6. Compete on value, not price. Notice something. None of these are about having the most money. They are about thinking differently in a market where most people copy. That is why a small team from Lagos could sit at the same table with Visa and Microsoft. They were not playing draft. They were playing chess. What is coming in part 3? We still have 2 principles left. One is about how Flutterwave handled talent and speed in a country where African time is real. The other is about how they use storytelling to win the public while fighting battles privately. After that, I will break down the 3 biggest mistakes other Nigerian companies make when facing competition. Mistakes that have killed good ideas and good people. Then we will close with lessons learned that you can apply whether you are running a business, looking for work, or teaching others. Your next step. If part 1 opened your eyes and part 2 gave you strategy, do not miss the finish. Go to my YouTube channel right now and hit subscribe. Turn on notifications. Part 3 is where we tie everything together and give you the action plan. Nigeria is hard, but it is not impossible. Flutterwave showed us that. Now it is your turn to take these principles and build your own version of winning. See you in part 3. And remember, the market does not reward the busiest. It rewards the wisest. Subscribe now. Let us finish this together. Title: The Final Playbook, How Flutterwave Nigeria Finished Fight and What It Teaches. You picture this. It is 2022. A global recession is biting. Nigerian startups are laying off staff. The central bank is changing rules overnight. Competitors are slashing prices to survive. And yet, Flutterwave announces a new valuation that makes it Africa's most valuable startup. How? Because winning the first round in Nigeria is not the same as staying champion. A real battle starts when everyone copies you, regulators come knocking, and the easy customers are gone. Welcome to Part 3. In Part 1, we covered how Flutterwave entered the ring by building infrastructure, growing the market, and weaponizing partnerships. In Part 2, we broke down how they used regulation as a moat, avoided price wars, and built trust when others chased hype. Today we finish the 8 principles. Then we expose the 3 deadly mistakes that crush Nigerian companies, and we extract lessons you can use, whether you are unemployed, running a small shop in Ibadan, or rebuilding after a layoff. Let us close this case study strong. Principle 6. Own the hard problems everyone else avoids. What it means: in Nigeria, most businesses compete where it is comfortable. They build the app, but they avoid the messy, unsexy work. Flutterwave ran toward the hard problems and turned them into a shield. How Flutterwave did it. Cross-border settlement in Africa is a nightmare. Every country has different bank rules, FX restrictions, and fraud patterns. While Paystack doubled down on making Nigerian payments delightful, Flutterwave spent years solving multi-country treasury, compliance, and reconciliation. That is why when Uber needed to collect Naira in Lagos and pay drivers in Kenya shillings the same day, they called Flutterwave, not a local aggregator. Compare. Traditional banks had the licenses, but their tech was clunky. Telco wallets had distribution, but could not touch dollars. Local players like Stripe avoided Africa for years because the problems were too hard. Flutterwave said, if we solve FX, licensing, and fraud for 34 countries, who can compete with that? For you, unemployed? Do not just learn digital marketing like everyone else. Learn digital marketing for export companies dealing with FX issues. Underemployed? Do not just sell food. Solve the hard problem of daily delivery in the rain for office workers. The harder the problem, the fewer competitors you have. Principle 7. Build a brand that feels global but acts local. What it means: Nigerian customers have trust issues. We have been burned by Ponzi schemes, failed startups, and banks that freeze accounts. To win, you cannot just be efficient. You have to feel safe, modern, and world-class, while still speaking our language. How Flutterwave did it. Look at Barter by Flutterwave. The design, the speed, the customer support felt like a Silicon Valley app. But the problems it solved were deeply Nigerian. Creating a dollar card without visiting a bank. Splitting bills with friends on a Friday night in Lekki. Paying for Netflix when your local bank card got rejected. Compare. Many local fintechs looked local and felt local. Limited trust. Many foreign fintechs looked global, but ignored Naira realities. Flutterwave hired global talent, raised money from Silicon Valley, got on the cover of Time magazine, and still ran campaigns in Pidgin and Yoruba. That mix made banks take them seriously and made Gen Z download the app. For you. If you are a tailor in Ibadan, your Instagram page should look as clean as a brand in London, but your caption can say Omo, we dey so and sharp. If you are job hunting, your 105 format should match global standards, but your story should show you understand Nigerian chaos. Win trust by being both. Principle 8. Play the long game. When others pack, What it means: Nigeria rewards short-term thinking. Make quick money, move on. Flutterwave survived because they made painful, long-term bets while competitors chased quarterly wins. How Flutterwave did it. They got licenses in the US and UK early, years before they needed them. They built risk and compliance teams that cost millions when revenue was still small. When fraud hit the industry in 2021, many startups paused. Flutterwave doubled down on security, even if it slowed growth. That is why global merchants still trust them after scandals hit others. Compare. Some competitors grew fast by ignoring KYC rules. When the CBN cracked down, they vanished. Some banks refused to invest in APIs because POS is working. Flutterwave bet that the future was embedded finance, even when the present was still cash. For you, on social security or between jobs, the temptation is to grab any quick gig. Long game means using this period to learn a skill that pays in 5 years, not 5 days. For small businesses, it means registering your business and keeping clean records, even when customers pay cash. Pay now, power later. The 3 deadly mistakes other Nigerian companies make. Flutterwave's rise is clearer when you see where others fell. Mistake 1. Competing only on price. Too many Nigerian businesses think the only lever is cheaper, so they cut margins until nobody can pay staff or fix the product. When Paystack and Flutterwave started, new startups came in shouting, "We charge 0%. They died in months. Flutterwave rarely won by being cheapest. They won by being most reliable. When a merchant was doing a Black Friday sale and could not afford a failed transaction. Lesson: if your only pitch is price, you have no business. Compete on trust, speed, or access instead. Mistake 2. Ignoring regulation. Until it is too late. Founders say, move fast and break things. CBN says, we will break you. Many mobile money and crypto startups scaled first and asked for permission later. Accounts got frozen. Licenses got denied. Flutterwave invested in legal and compliance from day one. They hired former regulators. They went to Abuja before Abuja came to them. Lesson: in Nigeria, regulation is not a department. It is a product feature. Build it early. Mistake 3. Copying without context. A founder sees Stripe in the US and says, I will build Stripe for Nigeria, without asking why Stripe works there. The US has SSN, strong credit bureaus, and chargeback systems. Nigeria has BVN issues, debit card fraud, and cash dependency. Copying the app without copying the context kills you. Flutterwave did not copy Stripe. They copied the idea of infrastructure and then rebuilt it for African chaos with USSD, bank transfers, and manual settlement options. Lesson: do not import solutions. Import frameworks, then solve local. Lessons learned for entrepreneurs, the unemployed, and the underemployed. Let us bring this home. What does a 52-year-old in Ibadan or a young graduate on Social Security do with Flutterwave as playbook? Lesson 1. Start where you are, but think beyond your street. Flutterwave started in Lagos, but built for Africa. On day 1, you can start a plant and ship business in your kitchen, but design the packaging and process so you can supply a store and crate next year. The mindset is free. Lesson 2. Your biggest competitor is non-consumption. Your fight is not always the shop next door. It is the customer who is still doing nothing. Before Flutterwave, millions of small businesses just did not sell online. Flutterwave won by converting them, not by stealing them from banks. If you are job hunting, your competition is not just other applicants. It is the company's option to hire nobody and overwork the team. Show them what they lose by not hiring you. Lesson 3. Trust is the real currency in Nigeria. Tech is cheap. Trust is expensive. Flutterwave spent years and millions to become the name global companies mention when they enter Africa. You build trust by doing small things well. Deliver when you say you will. Answer calls. Refund without argument. In a low-trust economy, the most trusted person wins. Lesson 4. Skills beat certificates. Right now, Flutterwave did not hire based on where you schooled. They hired based on what you could build. If you are underemployed, stop waiting for a perfect job. Learn to integrate a payment link, run Facebook ads for a church, or reconcile accounts for a small vendor. Those skills are the new degree. Lesson 5. Collaboration is faster than competition. If Flutterwave had tried to fight banks, MTN, and Vulsa at once, they would be dead. They partnered instead. You do not need to know everything. Partner with the person who has the camera, the one who has the shop, the one who has the laptop. A small team that trusts each other beats a big solo genius. Closing the case study. So, 8 principles, 3 mistakes, 5 life-changing lessons. Flutterwave did not win in Nigeria because they were the smartest. They won because they understood Nigeria. They knew our problems were not the same as San Francisco's. They knew that to compete here, you need patience for regulators, love for hard problems, and respect for the customer who still keeps cash under the bed. And that is your edge too. You live here. You feel the pain. That means you can build the solution. Your next move. We are done with the case study, but your own story is starting. I break down more African business playbooks, interview real founders, and give step-by-step guides for starting with little capital every single week. Go to YouTube right now and subscribe to my channel. Part 1 and Part 2 of this Flutterwave series are already there, plus videos on how to use these principles to start a side hustle with 50,000 Naira or less. Do not just watch Nigeria's economy happen to you. Study how the winners move. Then make your move. The giants are not as comfortable as they look. And the next Flutterwave might be you. Subscribe now. Let us build.